Right. Good morning and good afternoon and good evening to everyone. Again, my name is Neil. Never really tell you people who I am, actually. I'm Neil. I'm a co-founder of the ANTS trading system here at ANTSSYS HQ in London. Been trading for about now coming on to my 7th year with a modest level of success. And it was that planted the idea of us sharing a little of the insights of what we do. The exciting bit has been creating a package, a piece of software around what we do to describe our system. And what you see in front of you is years and years of hard work trying to describe what it is that we get up to every day to trade as successfully as we can. And that's called the ANTSSYS trading platform, or the ATP. Thanks for coming in today. Just to give you a little heads up what we're going to do, I've got a little format I'd like to run through. First of all, the basics of logging in and so on. Then I'm going to spend a little bit of time. It's a question that keeps coming up around how we deal with the x-axis, the magical time versus volume tick, what I call time and tick on the x-axis. Then we'll be looking at specific to tradecraft. How do I do, what do I do, and why is it important to me? And then we're going to look at some specific examples. I'm going to go through something of a role play as though it were me sitting down to trade, and what I would do, how I would do it, and then why. So just to give you some very clear examples live, as it were, or relevant examples right now of a way that you as a trader would hopefully be doing the same thing as a guideline. Then we'll be looking in a little more detail around the structure of the charts in terms of, as I said, this tradecraft, the actual how they're physically put together and why. Why is this information important and what are you seeing? And then finally, I'd like to end with about 10 minutes of questions, which I think is always really insightful. It shows how effective my communication skills are or aren't. And again, I would ask any of you at any time. I do have my colleague Grant on on the connection with me here. Sitting alongside me, as it were, and he will be dealing with the questions that you have posted up. And if he's unable to ask the question himself, he will flag me, and then I'll have a look at the question and answer it with you directly. So please don't be shy to jump in with questions. It's a nice small group. I think there's only about 20 of us or so here, so it's a nice small crowd so that we can deal with everyone's questions. Right, guys, just to get started. You will have arrived, you all got your OANDA credentials, you'll arrive at our website. This is all common for you. I'm going to be going through the practice account today, just for fun, just to pull it up as an option. And you can see I've logged in a little bit earlier. That's a nice looking chart. Didn't look that way when I logged in 10 minutes ago. There's the 12 o'clock, so it's done a bit of action since I had a look at it. The chart that I'm looking at here, by the way, for you is EuroCAD. So that's the basics of logging in, guys. Very straightforward. You arrive, everything is pre-populated with all of the studies that you need. Now, just basic housekeeping. This is something that does seem to come up more than once, so I'm going to say it again right at the start. When you're looking at range bars, when you convert from a time-based chart to a range-based chart, please make sure that your time setting is on the fastest possible. In this instance, it's in the 1 minute chart. Anything beyond that, 3 minutes, 5 minutes, 10 minutes, and so on, is going to change the speed at which the data is pulled from the OANDA servers and will change the way that the charts actually physically appear. Now, when you arrive on the charts on all of the US pairs, we're going to be focusing on the US pairs this afternoon. When you're looking at the US pairs, guys, it automatically scales the chart to fit into a normal resolution screen on a normal browser, and it will scale it accordingly. In general, that will mean that each one of these range bars is around 3 pips. Just so that you know, that's the normal, that's the average. However, if you haven't physically selected range bar sizes, in other words, if you haven't specifically instructed it as I have here, but bear in mind we're looking down to 4 decimals, so we're operating down to 4 decimals here, so 0.0003, so 0.1, decimal 2, decimal 3, and decimal 4, and we're down to 4 decimals, 1, 2, 3, 4. And that's the reason we say that. If you auto-select your range and then change the scale of your charts, in other words, if you start adding drawings or you add extra studies, because it's a highly mobile site, because it's a highly mobile platform, the platform itself will try to scale the data that you've asked to call it and change the size of your range bars. Now, this has created a little bit of confusion in some of the tickets that we've seen come through support. It does it automatically because it's trying to give you the information based on the scale that you've asked it on the screen that you're looking at. In other words, it's trying to find commonalities between an iPhone screen or a Galaxy S7, if you're lucky enough to get one, or an iPad. So just be aware of that. If you want to look at something specifically, you guys must make sure that you actually told it to not just auto select, but on the currency, US currency pairs, actually select 0.003, which is a 3 pip range bar. So to describe again, that means that each one of these bars will be 3 pips. Now, in terms of the outline, before we get into the trade crafting, I just want to explain, and for those of you who are familiar with this, just to I guess give you a heads up. So my apologies if some of this is redundant. In other words, you've heard it before, but I think it's very important to actually physically show this to you guys and why we do it this way. So what I'm going to do is I'm just going to take this chart, and it happens to be the first one that I am looking at, and I pasted another one. As simple as that. This is the quickest way to open up a chart, guys. You just Control-C and Control-V. It'll pull the same data in again. You'll see the chart will be replicated. If you then want to create a second chart, you just double-click it down, and then drag it away. So grab the tab and drag it away. So it's quite intuitive. It's quite clever, really, as a desktop. So there we go. We now have two charts looking identical. The currency pair that we're looking at, guys, is Euro-CAD. I hope everyone's following what I've just done there. I have just created a duplicate of the chart. So I've got two. They look identical. There's 8 o'clock this morning. I'm in UK time, and I'm in GMT 0, so Zulu time. So 8 o'clock here is 8 o'clock here. That's what we're looking at. So you can see the x-axis is 8 o'clock down here, 8 o'clock, these which is 8, 9, 10, 11, 12, and so on. So we've had a little bit of a nice short activity on Euro-CAD this morning since about 8 o'clock. What I want you to show is the reason that we do this is that the reason that we use range bars, and this is a fundamental question that it keeps coming up in terms of how people, sort of, in other words, what are we doing? What is the mechanics of what we're doing here? So the first thing I'm going to do is I need to turn off my MA crossover. The reason that we do that is because the MA crossover is one of the most powerful tools that we use in terms of determining trend. And of course, trend is your friend. And by using the MA crossover, it will physically color and manipulate the information on the chart to visually give you the best picture. So I've just set mine up. Don't worry about the squiggles. That's just how it happens to be set up at the moment. I'm going to change it to a candle pattern. The next thing we're going to do is we just turn off some of this other stuff just to give you guys a bit of a clearer picture of what it is that we're looking at. And you can now see just turn those off, and I need to turn the range bars off, of course. So now we're looking at candles. Right, give it a second to pull some data. All right, so what we want to do now is, and this is great fun. This is always very, very interesting. We're just going to scale. In fact, let's just scale in a bit more data. In fact, that's probably a fair deal since about 1 o'clock this morning. Let's just pull a bit more data back in on this one as well. Let's just pull it back. It's about 1 o'clock this morning. Okay, so what's interesting is that we are now looking at exactly the same chart. We're looking at Euro-CAD on top with a 1-minute candle pattern, and we're looking at Euro-CAD with a 3-pip range bar. Roughly speaking, generally speaking, they are operating at around the same speed. And I say speed in terms of, because bear in mind, on a candle-based pattern, your x-axis is fixed. In other words, a candle will print in this instance, every minute. Boom, it's going to print a candle. In a range bar, the bar only actually forms if price has moved that amount of action. In fact, in other words, price action has moved more than about 3 pips. And the reason that we do that is because it reduces noise. It eliminates noise. Now, I look at this section here this morning from about 8 o'clock. So in other words, let's just line up 8 o'clock with 8 o'clock here. Let me just do that quickly. So we had lots of activity this morning at 8. Okay, so a little bit more. I know this is a bit clunky, guys, but it's important that I show you the difference here. So these two charts at the moment largely match each other in the potential shape, but look at how much more granularity. In other words, the basic structure of the chart we get to see by comparing a time-based chart and a tick-based or a range-based chart. Now, I don't think there's any better description of showing how it physically will work. You would have had no idea since about 2 o'clock this morning that we were in an uptrend. Difficult to tell at this stage here. We're here, it's perfectly clear. There was a turnover at 8 o'clock this morning, deep, huge price movement. We're going to look at that in a second as well. Nice deep retracement and a signal fired at about 9 o'clock this morning. Now again, at 9 o'clock this morning on the candle pattern, one would have argued that we were this is it's a little bit of a head, it's kind of a squiff head and shoulders pattern. Arguably, there's the head and shoulders. We'd be arguably looking for a long here. But interestingly, by just changing the format of the x-axis from a time-based candle to a range-based, a tick-based data, look how much more granular, look how much clearer the information becomes. We were clearly getting into a short, and look how well that's worked for us. So in other words, using what 99.9% of us actually physically do with our charts, MT4 and so on, looking at candle-based charts, you probably would have been setting up for a long. Interestingly, the information that a range bar was giving us, and this, by the way, is the first chart that's come up. I haven't chosen this one. It's just the one I've pulled. A very good, relevant example of exactly how that works. On a 3-pip range bar, look how much more clear this information was that we're in a downtrend. And within our MA channel, which is the safe zone on either side of this 300 EMA, so just to explain what that is, you'll notice there are 2 clear color lines. One is blue and one is orange. When the blue line is below the orange, we're shorting. We're going to short. We're going to sell, take short positions. And when the blue line is above the orange line, we're looking for the long positions. We're buying, putting in buy orders. And it is as simple as that, where this chart here is, I believe, not giving us as good information. So that's probably the most, I mean, it's a great example. We're looking at 2 identical charts. They're giving us exactly the same information, but in fact, they're not. One of us is giving a very clear indication that we're into a short, and the other one is giving us a little bit of mixed information. So that fundamentally, guys, is why we use range bars or tick-based data. We get clearer, more granular, more detail, and that for us is good. It also means, and maybe this is an aside, I hope I don't lose you with getting too deep into it, because we're using a number of mathematical calculations which are plotting, they primarily look back, in other words. So they look back and then assess trend based on the behavior of the tick-based data leading up to that point. It's much easier for me to plot. Imagine if you were trying to explain to a 10-year-old who'd never seen a chart before that this long red bar here is fundamentally represents the same amount of information as perhaps that little skinny green bar there. This one's got a really long wick. That one's got a long wick. That one's almost got no wick at all. So try to describe mathematically on a level playing field that in fact is the same as that. Whereas I can say clearly that is the same as 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 that. And that for us in a mathematical argument becomes infinitely easier to plot, which is why we're enjoying the performance that we see from the ANTS trading system, because it fundamentally strips down the noise and gives us granularity at the basic level, which is at the tick or volume-based level. So that explains it, guys. That's probably one of the most important things that we're looking at, the reasons that we look at range bars versus tick bars. I mean, you can see it quite extraordinarily illustrated there between the two. So I'm just going to turn that off quickly. And we'll come back here. Are there any questions at this point, just while I've started on that? Nothing in terms of range bars and tick-based charts and time-based charts that anyone jumps out at? Anything at all? Good. Okay. The next thing we do is, okay, so now we're going to talk a little bit more about this trade crafting. In other words, like how do we do it? What do we do, Neil? Come on, like, you know, this is all very great theoretically, but you know, how do we physically do this? What do we do? Right. So the first thing is always start at the ANTSSYS website. So come across the ANTSSYS. You'll see on our front page, it should be familiar for most of you. Under our support tab is this little menu option called average daily ranges. And alphabetically, initially, it sorts every one of the major pairs from top to bottom alphabetically, and then the major signals indexes or CFDs as well. And you'll see there's ES, the S&P 500, NQ, the NASDAQ, YM, the Dow, Aussie 200, then a couple of the indexes, so the CAC, the French CAC, the German DAX, the American Dow, the London FTSE, and so on. As a trader, I want to be maximizing my time. I want to be using it as the best opportunity. You on the big pairs like Euro US, for example, only got a daily range of 84. You're not going to be expecting to do a full 80 pips out of it as a range, as a performance every day. So first of all we start there, and we can do this very easily, guys. We just click on to sort them from high to low just by clicking on it, either on the 5-day or the 10-day. It does it automatically. One we probably want to look at, by the way, and please don't take this as a gospel, but I'm not a great fan of Pound New Zealand, and I don't want to discourage anyone from using it if you're having a good result in it. I tend to find, it's been my experience, having done this for a couple of years, looking particularly at the high-ranging pairs, particularly GA, GN, EA, EN, or Euro Australian, Euro New Zealand, and Pound Australian, Pound New Zealand. It's been my experience that Pound New Zealand tends to range rather dramatically for quite a long time and then burst and run. Now, for me, I want a bit more level of quiet consistency, and it's been my experience that a chart like Pound New Zealand, while it's got nice high ranges, a chart like Pound CAD, or certainly even Pound Australian, almost definitely Pound Yen, purely because of its volume, I believe it's the fifth or sixth largest currency pair in the world, are certainly going to be better results for me. And that's been my experience personally. I would not discourage you, but it's been my experience. I've always felt that I'm fighting with Pound New Zealand. With there have been other pairs that will work a bit better. Philip asked the question, what time do the ADRs get updated each day? Philip, we update them at midnight GMT. And then obviously they will move during the day as well. So when you've got an ADR plotted on your chart, I had a question came in last night from support, and people were saying that they noticed that the ADR lines had moved. Bear in mind, as the chart moves up to its 100% of range, if it goes 75 or 100% and beyond, if it's climbing, it'll pull the lower based range ADR up with it. So it's set at midnight in GMT. That means that people in Australia, you're getting probably the back end of the data, where the people in the US, you're probably getting the front end of the data. But GMT is a pretty good indicator. Just to, in perspective, guys, around, and I understand this to be true, around 70% of all currency transactions, Forex deals, get done through the London session. Apparently, it's about $11.2 trillion a day. So we chose the London GMT session as being probably the most appropriate. Now, your mathematical indicators, perhaps of an ADR, might show 5 or 6 points different. Don't worry about that. It's all set around the London session. So that's why you may see a little bit of a time. Good question. Thanks, Philip. Right, so we're going to look at let's look at Pound CAD. I think it's nice to see that it's nice and volatile, quite nice and high. It's maintained a quite good bit of volatility, quite a good bit of volume or movement over a 10-day as well. So this doesn't seem to be artificial. In fact, it seems to be climbing. It's from 255, it's up to 269. So this would be a good one to look at. So let's do that. What have I done with my charts? Pound CAD. Let's just do that. Very easy, guys. You just type in the symbol that you want and it'll automatically filter it out. Okay. Wow. Interesting looking chart. Okay. So the first thing that you're going to be doing is you look at a chart, you make sure that it's, first of all, as I say, make sure that your range bars are set to 0.0003 so that each range bar size is 3 pips. And at this point, we're now looking to see, we want to get an indication of what the longer term trend of the chart is going to be. Now, before I start on that, there's something which I think when you see, kind of when it gets pointed out to you, it becomes really, really clear. But unless it's someone's physically said, hey, come and have a look at this. What I want to show you is just looking at this chart here all over. I'm just going to turn off the MA channel just to give it a bit more clarity. Concentrate, guys, for a second. Look, everybody keep an eye on the 300 EMA, this bright orange line here. And you tell me to the pip, in other words, almost to the single point, how often price does something interesting. And interesting is subjective, of course, but look how often price does something remarkable at or around the 300 EMA level. And just looking at this here, so there's the snapshot. There's midnight last night on Pound CAD. Okay, obviously it would have been a bit quiet overnight, but during the end of the US session, everyone's sleeping, of course. But look here, so price rose up. This is at about 4 or 5 o'clock this morning. So big movement early in the morning. That's interesting. So if you were up at 6, 7 o'clock, you would have seen that there was quite a bit of movement. It's exciting to get your attention that the chart is moving early. That's always a great, very interesting, very good sign. Price falls down, and look what it does here, guys. Touches the 300 EMA, gets down to the 300 EMA. Now, the important thing with the 300 EMA is it's either, generally speaking, going to be support or resistance. Now, to those of you who may be new to the trading arena, support means that when price comes down, it gets supported. Imagine some hands holding price up. Imagine support, hands held out with palms up. Price comes down and it gets caught by this 300 EMA. It gets supported. So price will come down, climb up, come down, touch the 300 EMA, and then get supported, pushed up. Imagine a set of hands, just visually, I always do it. Imagine a set of hands gently underneath price, pushing price up again. And that's what the 300 EMA does. It becomes support. Look how often it becomes support. So around this level, it becomes support. Around this level becomes support. Certainly around this level, absolutely clearly becomes support. And then what happens is we get quite a deep breakthrough, comes up, breaks through again, and look what happens. Support becomes what we call resistance. Again, for those of you who are new to this, sorry, the guys who've done this, who are the old hands, bear with me for a second, go and put the kettle on. It then becomes resistance. Flip your hands around. So that 300 EMA then becomes a line of resistance. In other words, becomes an energy, a force which is pushing price down. In other words, it wants price to go away. So price then comes down through the 300 EMA, cuts through it, comes back up, and then look, suddenly the 300 EMA, this orange line becomes resistance. It resists, it pushes down. The hands, the palms are facing downwards. And then look what happens again. It breaks through all the way through. This activity here, guys, 8:30 this morning, I would put my money on it that there was a pound news announcement at around 8:30 this morning. A little bit of an artificial spike here. Price comes down, breaks through 300 EMA. We'd be looking for a buy, by the way, because price has gone over. There's been a color change. We'd be looking for a buy around this time. Again, assuming that it's in line with the longer term trend, which is we're going to deal with in a second. But we're looking for a buy opportunity at or around this level. Price smashes through. This 300 EMA, it ignores it. It doesn't even notice the hands aiming upwards. No support for price at all. Punches right through the 300 EMA, and look what happens. Color change, and we like color change. Remember, everyone, ANTSSYS loves the color change. So we see that the color changes from green to yellow, orange, yellow to red. Now we're looking for the shorts, and look what happens here. Look at price comes up, and boom, the 300 EMA becomes resistance. Absolutely extraordinary. From this morning at about 9:20, we got a great short signal and all the way down. Now, initially we had a fall down all the way through price, assuming, guys, again, let's not be mercenary. We don't live in a perfect world. You may have had relatively tight stops. Let's just see how big these moves are. Let's just calculate what they are. So that initial move down moved 27 pips. So quite a big move up from my entry point. It then went against us about 17, 18 pips. Now, on a chart like this, a stop of about 30 pips wide is probably not bad. Again, remember the ADRs, I've said in my previous messages that your stop should be loosely around 10% of the ADR, 10 to 12% of the ADR. We know the ADR is 270 odd pips. So it would be at around 30, 35 pips potentially as a stop level on this chart, looking at the ADR. So we got on at that point there. We're about 17, 18 pips again. So in theory, most of us, unless we were all feeling a little bit nervous, would have been in this trade and stayed in it. However, if we got bombed out at that point and taken a small loss, again, it happens. Again, I sit here with the knowledge of 2020 hindsight. I can look back and tell. But in the real world, I might have gotten to this point, got it up to 20 pips. I might have scaled back when it got to about plus 10, plus 9, plus 8, and probably banked it for a little bit of a winner. Maybe even let it go back to break even. Then it punches through. Now I'm looking to see whether this EMA becomes support. In other words, punches through, it's ignored this resistance. I'm looking for price to descend, and look what it does. It's just a nice deep retracement, which is what we call a nice deep movement. It's a retracement. So you can see these guppy lines become nice and compressed. We get a beautiful ant firing right at the 300 EMA. Now, guys, that is the gospel of ANTSSYS trading. If you get a signal after a big movement or retracement and a short signal fires right at the 300 EMA. I mean, you're right at this area where we know the 300 EMA is support and resistance. It's an area of high activity. Price never lingers around the 300 EMA. It always races away from it. Now, we've done that on the basis of thousands and thousands and thousands of days of testing. So when I say it isn't just me being theatric. It is absolutely true. Price wants to run away. It wants to move away from the 300 EMA. So at this point, we see price break through, nice deep retracement all the way through, and we get an ant on the 300 EMA. That would be, man, you could be putting I shouldn't say that. I wouldn't say you put your car in it. But you could be quite confident that this is going to be an exciting indication. And let's just put an array. I've turned it on and off. 1 second. And you can see since this morning it has generated, since about 10 to 10, it has done 83.5 pips. The question, of course, becomes, where do I get out? Let me just turn that off. Of course, we put on our ADRs. And you can see we've got to the 50% low. We haven't even got to the 75% low. So in theory, we could hang on to this trade for about another, from where price is now, we'd want to probably bank another 47. So it could be as good as a 100 pip trade. If you guys let this one burn you, in other words, go against you, then perhaps trading isn't your beast. We don't want to be looking at a beautiful trade like this, generating a good 70, 80 pips or so. I mean, that's a good trade, guys, and then retracing and turning into a loser. Please don't lose money by hanging on to trades for the sake of. I'm always happy to say I'd rather have 10% of something than 100% of nothing. So that's how we look at by looking at the shape of a chart, by looking at the 300 EMA, we're looking for areas of support and resistance. And I hope I've made it quite clear. And again, pull up any chart, guys and girls, that the 300 EMA is an area of, look at this. I mean, I could punch through. If you missed that one, it gave you a screaming sign, an absolutely clear shouting message that we're looking for another big short here. And it did that, what it says in the tin. In case some of you, the concern is, of course, is, well, Neil, that's great. I mean, perfect. Well done, shot, for showing us a good one. How do I know it was going to short? In other words, how did I know that I was looking up for the shorts in this instance since this morning? Because we did have, it started off short, then we had this huge bounce, and then we had it fell down, retraced, and down. Who was to say that that wasn't the huge bounce and this wasn't the consolidation and continuation for the long? In other words, why wasn't this a long? And that's, here comes the trade crafting, guys. What you want to do is, you want to go to something like, and it's up to you. I'm quite fond of Forex Factory myself. There we are. Just to go show you on the calendar. I said you could do this. There are probably 50 websites on the internet that give us this information. I personally quite like Forex Factory. It's a very big community. Take some of what gets said there with a pinch of salt, but it's a really nice, active community of traders, very much like the retails guys that I guess we all are when we started. Looking at the calendar, the currency pair that I'm looking at, remember, is pound CAD. We know that we're looking at pound CAD, so I'm looking for anything that's got a pound or a CAD next to it on Thursday, which is today. And you could see, look at that, 9:30. I did say there must have been news this morning. There was a red folder event at on pound this morning. So you probably would have stayed. Guys, stay out of the market during the big red letter events on the currency pair that you're looking at. So any of the US pairs at 1:30 in about an hour now, just keep an eye on those trades. We're not gamblers. We work in high probability orders. And when it's giving you a screaming red folder that there's going to be volatility or big movement, don't spend money. Close your trade and come back in again, or just avoid the currency pair if there's a great deal of activity or of news activity around it for the day. But there's a great example, 9:30 this morning, and we had a spike. There we go. So an artificial spike. So that's where you want to be looking at in terms of what pair to choose. The question was, of course, Neil, great, like well indicated, nicely shown, very clever, very sexy, all that good stuff. But how on earth do we know whether this is in a downtrend or this was beginning of the uptrend? What we do is, again, this is new features that we've added, which some of you will know we couldn't do before. You just Control-C and Control-V. And you don't have to open multiple accounts and multiple windows. It automatically just populates the data, pulls it in. This is a nice feature of the Windows environment. Just grab the tab and drag it away, and it'll turn into another window. Whoops, now I've gone too big on that one. Right, so you guys will agree we've now got the two charts on top of one another. It's the same data on both, so it's identical. This is a 3-pip range bar. What I want to do is looking a bit further back. The question is, Neil, how do I determine what the longer term trend is? How do I know whether we're in an uptrend or a downtrend? Change that to just a further look back. I typically will go on a chart like this as long as maybe 8 or even 10 pips. This is now what we're doing is we're saying, right, looking back, what state is this chart in? And it's very clear, everyone, that this was in a downtrend since yesterday. Quite clearly since 6 o'clock, in fact, 2 days ago. So Tuesday afternoon, this has been in a downtrend. Now, trend is your friend. We've got all of these tools that are giving us, shouting to us, they're giving us a very clear message that this chart is in a downward trend. We've got a huge movement through, pull back to the 300 EMA and the ANTS fire. Again, assuming you missed that one. This stuff here is the bread and butter of the trading system. Mark's question is, using the 3-to-1 system, how many pairs would be sensible to monitor? And Mark, I know we've had a couple of problems with throttling, bottlenecking with data coming through on his charts. I think I understood you were running as many as 15. I must maybe speak from personal experience. I think it's the most relevant. In other words, let me not give an example from a textbook. Let me talk about my own personal trading life. We have a team. Generally, it runs from 1 to 2 to as many as 5 or 6 people. Or we all trade together most days. The guys are trading hard at the moment on the US session on the indexes. The Nasdaq being a particularly good index at the moment. It's been our experience. I've got a matrix that shows 27 major currency pairs on a single page. Now I've got very high res. I've got 4K screens, and I've got 6 of them with 2 trading panels. So that I'm being presented with a great deal of information. Mark says 10. Yeah, see, now it has been our experience personally. What we would do is just to divvy up duties and responsibilities. Each one of us would be required to watch a set of pairs. So Mark, you would look after 10, I would look after page 10, and so on. Iqbal, I'll come to your question in a minute. So between us, there'd be, let's say, 18 or 24 pairs or so. We're each watching 4 or 6 pairs. Anything more than about 4 pairs, 5 pairs, maybe at 6 pairs, we were missing trades. Now, that sounds silly, but the human performance, it's lovely for us to turn on and say, guys, listen, we can watch 20 pairs at once. Yeah, I can see them, but the chances that you can rationally follow, manage your trades, and execute on anything more than realistically 4 or 5 pairs, maybe 6 pairs, seems to be the human performance limit based on some pretty hardcore traders. I mean, we've got guys in our team. I consider myself to be a technical expert. I would challenge anyone on the team to have more knowledge of the system and how it works. But we've got guys on our team who trade considerable sums of money, and even them who've been doing it in a professional licensed capacity, dealing with literally hundreds of millions of euros on their funds. They hit a block at about 4 or 5 pairs. Now, I don't want to discourage anyone from saying, if you feel you can watch more than that, but it's been my personal experience that anything over 4 or 5 pairs starts to become the ceiling. That starts to become the limits of our capacity. So pick 4 or 5 and pairs. You can have a couple of charts on a pair, but anything more than perhaps even 3 or 4 pairs with 2 or 3 charts on each pair. So perhaps say 6 charts. So an 8 and a 3 and an 8 and a 3 and an 8 and a 3 on 3 different currency pairs. That's probably about where you are in terms of maximum capacity. I hope that answers your question. Iqbal, your question, the range set to 0.003 for all Forex pairs. For all of the high range Forex pairs, so anything that is ranging more than about 150 pips a day, back to the tables, so anything more that's here than about 150, so anything from CAD, Yen, perhaps Japan, US up, you're looking at about a 3 pip range bar. Anything that's slower than that, of course, it isn't giving us that much data. I would start to drop that down to perhaps a 2, down to about 100, or sort of 90 or 100. And then on the lower ones, you can even go as far as 1 pip range bar on the very low stuff. And the reason that you do that is because the chart needs to be moving. We need to be giving it some of the legs to move. It needs space to breathe. It needs elbow space. And we do that by selecting a range bar that allows the charts to move. And interesting, I was doing this with Karen, one of the ladies who's been working very hard with us on the system. And the question was, you don't want to be too prescriptive because this is fluid. It moves all the time. But let's just look at this chart as an example. Just looking at a 3 pip range bar chart, it's very clear that on a 3 pip range bar on the pound CAD, which happens to be today's second biggest ranging pair, that around this level, you've got the 300 EMA is clearly a point of high activity. So in other words, a 3 pip range bar chart, look at it, it's retraced nice and deeply and it's dropping down. So again, this is looking at a really, really nice trade. This would be a really nice trade. I didn't say it is. It's clear that on a 3 pip range bar on this chart, the 300 EMA is an area of nice high activity. Let's just change it. So let's do it together. I mean, it's again, there's nothing more annoying than someone who gets preachy about how to do something and can't physically show it themselves. It's one of the biggest weaknesses I have found with other indicators and studies out there is that in a perfect world I can look back. But show me now. Show me on a live chart, which is where this stuff is really, really powerful. Right. So what we do is we change this to a 5-pip range bar. Okay, now you probably find that, I mean, look at this. This probably wouldn't have been a bad setting to trade from. You've got deep retracement. Look, price smashes through the 300 EMA on the short. Touches there. Support becomes resistance perfectly. All the way down. Perfectly, support becomes resistance. So it's resistance all the way down and down. These 1, 2, 3 areas, it's giving you the indication that perhaps you're in a little deep. There's a little bit of change. There's a little bit of uncertainty in terms of where the price is actually going to go. Pull this way through at 9 o'clock. This is this trade that we saw. Runs in nice and deep. Bang, boom, ting, splat, pop, whatever you want to use. It hits the 300 EMA and runs away again. So, Iqbal, in this instance, looking at pound CAD, we can scale it back to something as deep as a 5-pip range bar. To put it in perspective, because of hedging, just again, I want not too technical in terms of what we do specifically, because again, I want to manage expectations. But we, at the moment, on the way we're trading, we hedge the NASDAQ against Euro Australian as a currency pair. So we start with the currency pair nice and early in the morning, sort of 6 or 7 o'clock in the morning, and we take positions, fairly strong positions. We happen to be trading on EA at the moment with a 10-pip range bar. 10. So don't be scared of scaling back, guys. This isn't scalping. This is identifying trend. So if it looks too choppy, if you're getting too much color change and too much chop, scale back. Make your range bar a bit bigger. That's probably good advice. I like to think I have some of it sometimes. That probably would have been one of them. Mark's question, yes, thanks for the follow-up. Do you think it's good to specialize in 4 or 5 pairs on a consistent basis, or just look at the top 5 ADR every day? Right. Again, let me answer that from my own personal experience. We've got a chap who used to trade with us. He was from Texas. Very nice guy, typical expansive Texan personality. He was absolutely obsessed with pound US cable. Absolutely obsessed. Let me just tell you, that guy, from the seat of his pants, could give us an indication of what the currency pair was going to be doing that day. But he consistently lost money on it because he was absolutely married to the pair. Now, I say consistently, he wasn't getting cut up too badly, but he was, in other words, there was so much activity happening elsewhere in the marketplace. The market changes from one week to the next, which is why we only use a 5-day ADR. He was so umbilically chained to cable that he was unable to take profit from other pairs that were going. Me personally, I have no affection for any particular pair. I don't particularly like Pound New Zealand, and I think I've spent enough time bashing it this morning. But for the rest of them, today I'll trade an index, tomorrow I'll trade a commodity, then I'm going to be, it's oil, then I'm going to be trading light crude, then I'm going to be trading pork belly, then I'm going to be trading the NASDAQ, then I'm going to be trading, so guys, it's just numbers on a screen. It's just patterns on a chart. Don't be hung up by the instrument that you're looking at. Where you want to be competitive is bang on Oanda. Tell Oanda you want to have competitive spreads. Look around and tell them that you guys want to be given good spreads, not widening spreads on I mean, because a lot of the guys don't trade on an index, they'll trade a CFD. So it'll be a cash index that sits above the actual index itself. Some of them are really well capitalized, by the way. Some of them have, I mean, wow, some of them have got like capitalization. I know one, I won't even name it, but one particular index, one particular broker has about 3 times the amount of money floating into the actual index it trades on. So there's a great deal of cash on those. I do have a little bit of a hang up on those sometimes because there's a derivative. You're not getting the actual price off the index. It leaves a little bit of space for the broker to massage price up and down, which sometimes can be a little bit frustrating for a small account. So just be cautious of that. Just make sure, keep your broker honest. I absolutely never seen that with Oanda, but I am aware of it, that in some cases the CFD can be quite far away from the price. So just be aware of that, guys. But don't be hung up on, don't be married to a particular index or a particular currency. Find something. Look at this. Look how pretty this is. I mean, Iqbal, I'm glad you asked the question because it's allowed us to show a good example of how price moves around the 3 EMA. How much do we set range for oil and the Dow Jones? Oil, Dow Jones are both 0 indexes, so one is 1. So in other words, one 1.0 or 1 is 1 pip on the Dow and oil, I think. I'd have to check. But if it's not, just ping me a support ticket if you don't find it, Iqbal. Just support at ANTSSYS and I'll pick it up for you. We can go through it together. Or post it to the forums, of course. Either way, we'll respond. The question was, can you enter trade on a pullback in the blue line EMA, or does it always have to be close to the 300 EMA? Where would you have entered the trade here? Okay. We tend to, again, this is true. I'm trying to focus on trade crafting here, guys. I'm trying to focus on the personalities that we're dealing with, the real life personalities. I'm a human creature and I need tea every now and again, and I want to talk to someone on the phone now and again, and then there's something interesting that happens on the news and I want to see it. So we're easily distracted. The reality is, try to discipline yourself to only trade the trade signals that come immediately after a color change. And here's a great example of it. So there's a color change and there's the short. Just to put it in perspective, I quite like this. I've got to tell you guys, I quite like this 5 pip range bar on the pound CAD. That is a sexy looking chart. So that's 164 pips happened there. The reality is, yes, Karen, we've had this before, Karen. The reality is, let me just put my crosshair on so you can see where I am. The reality is, this was probably a little bit far away. If your MA channel was on, you'd be looking, I'd be a bit nervous about taking it all the way down. Look how far price is away from the 380 MA. This is a big crunchy movement. This is too much like a false positive for me. Price comes all the way down. It's a bit tragic to watch, see the ants fire, the short signals fire, and we didn't get into them. But then look what happens. Just be patient, guys. This is still, technically speaking, this is the first trade after a color change that is nice and close to the 300 EMA. Try to get your ant firing to get the signal as close to the 300 EMA as possible. And the reason for that is because if you got it down here and this was a false movement, like one of these, like this green up here, let's say you got in over here, you wouldn't, I mean, you'd be ridiculous if you did. But let's say you took that log signal here, boom, look what happens, it falls over. And look how it plummets. I mean, you'd be sad, to put it mildly. The price comes all the way down to here. Now we're looking for the short. Be patient, guys. Be patient. I know we love the idea that we can sit down and click the button and we make money, but that's not the reality. That's not the nature of the charts. So keeping an eye on this chart, look how nice and deeply it traces almost to the 300 EMA. And just so happens, if you missed it, it gave you another, shouted another one at you here. Even this one would have been a little short. And then there's the turnover. Again, these ones who are starting to get a little bit criminally far away from the 300 EMA, although theoretically, some of these longs, although I hazard to say on the longer term, you probably would be looking for the shorts, guys. But in this instance, you may have taken these longs. You may have lost 10 or 15 pips. You certainly wouldn't have done these ones there. And then, boom, look at the short. Now, Karen, again, we're a bit nervous because it's a bit of a distance, a bit of a travel from the 300 EMA. But look what happens. And it does this, guys. It does this all the time. Don't take my word for it. Set up a chart. Put any range bar on it and scale the range bar size, 3 pips, 4 pips, 5 pips, 6 pips, whatever looks smooth, and then look how often price reacts at, on, or around the 300 EMA. And that's what we're looking for, trade crafting. If we're giving it the support of a longer term look back, in other words, you know, a 10 pip or 12 pip range bar to see the longer term trend, then it becomes very, very clear. So in other words, if you missed this one, guys, don't get into any of these trades. Don't. This one here, even here, although it's nice and it's a breakthrough, I'm concerned that this is going to become support. It happens to drop down, still remains resistance. You might have taken a cheeky short on that one, but you're starting to be, I mean, it's kind of tragic. You know, you've missed all of this one here. You really are picking up the tail end of what would have been a really good trade. Skip it. Come back tomorrow. Find another chart. Mark says, thanks. You're welcome, Mark. Do you consider the character, the shape of the super guppy when considering exit and entry and exit? Certainly for entry, I want to see, think of it as a coiled spring, guys. Think of this as being the sorry for the ladies in the crowd, but this is the suspension of a car. When your leaf suspension on the back of your truck is compressed, you're always going to see a big movement. So think of these as leaf springs on the back of a truck. Price comes down when the guppies are particularly the high-speed guppy, the blue guppy, when they are nice and close and we get a good tight, I mean, look at it, look how nicely these guppies begin to compress. That's when you want to be looking to trade. I hate to say it, I mean, I don't want to be funny or anything, we just turn off, oops, that's not what I wanted to turn off. If you just look back, just ignore the ants and just look at where price compressed, where the fast and the slow group compressed nicely, and particularly as I say, the 300 EMA in this instance became resistance. Look how nice the moves are. By the way, this is technically a color change, guys. This is the chart. The EMA crossover has changed color, so we'd be looking for another short here. Look at it again. Boom, all the way through. We'd be I mean, you're a bit sad because you're like, oh, I've lost out on 10, 15 pips. Price comes down, climbs right back up to the 300 EMA and down. This is just, I mean, guys, we can drill into this in a great deal of detail, but this is a really good example. Mark's is on the forum. Okay, I'll have a look. I missed that one, Mark. I'll have a ping for it. Guys, let's look at the time. 50 minutes. I've gone way over what I wanted to. I have, however, dealt with in a great deal more detail what I wanted to share with you all today. So I hope this has been insightful. Guys, 300 EMA is the beast. You want to be trading away from the 300 EMA, and you want to be getting in as close to the 300 EMA where there's a nice tight compression under the guppies. Look for the color change and look for the next entry after the color change. That's what you're after. I'll quickly just spend a minute to taking questions. You guys have been really good, nice topical, nice relevant questions. Thank you for that. I'm just going to punt you all again with my frown on, my stern face. Guys, please, feedback on the surveys is what builds these discussions. Now, you may have noticed that this particular session has perhaps been more relevant to you, and lo and behold, it's as a result of some questions that were asked in the survey. So please, guys, respond to the survey. It doesn't advantage us at all. My time is yours anyway, but I'd rather be using my time for something which is valuable. I don't see any more questions. I think we've probably taken enough time. As I said, guys, thank you all very much for joining us. Just to summarize what we've spoken about today, we've gone through the basics of getting to the system. We've spoken about trade crafting in terms of selecting yourself a pair. We've done that through looking at ADRs. We've taken a good look at currency calendars, Forex calendars, and I go to the Forex Factory one, which is a good one for me. I quite like it. So that's there. And then once you're decided on your pair, get a little bit of a further look back. Try to change your range bar size, anything from 2 to 5 to 7 or 8, to make sure that you're getting price moving, reacting around the 300 EMA. And then we're looking for a color change and the first entry after the color change. Nice and tight, guys, nice and tight. If you find it's too far away, let's, for example, you've missed it one here. It's been driven by a fundamental that you're not going to catch up with anyway. In other words, the opportunity is lost. As I said, I'd rather be in on something that gives me 10% of something than jump in enthusiastically and be on the wrong end of it and lose. Just makes a great deal of difference to the psychology of it. Gulam's got a question about Firefox. Okay, you were interested. Oh, yeah, I do remember your question. It's an interesting one. I use Chrome because it's sort of what our developers in Virginia have been using. Personally, I prefer Firefox for my own personal needs, but I've always generally used Chrome. But thanks for that, Gulam. It's interesting, guys, that there's a bit of a rave review around Firefox. So always don't be tied to your browser. Iqbal, you're welcome. Find some things there's retracement of previous day's activity, but all the signals are red and get stopped out. Mark, again, I'd like to actually too early. Again, very hard for me to do without seeing an example of what it is. Let's ping me a mail, support at, and let's deal with that together. I've got a little bit of time. We can deal with that now with pleasure. Same back to time, take a look. Okay, perfect. Hayden says, excellent presentation. Woo, Hayden, we do like excellent is a word that makes me happy. Guys, please give us your feedback. I think I've taken more than enough of your time. It's always very exciting for me to talk to you. Always great to have a community of you here. You're our friends, first of all, and I am available to help you. That's sort of the point. And on that note, thank you again. And you will be receiving a survey. 8th time I'm pointing out, please do the survey, guys. As soon as the session closes, you'll be taken to it, and then you'll be sent a copy of this recording at about almost exactly 12 o'clock tomorrow. So thank you again, everyone, for joining me, and we will look forward to chatting again. Great presentation, Terry. Thank you. Cheers for now, everyone. Bye-bye.